This company just bought $77 million worth of Bitcoin, while already losing billions. And they're not stopping. No hesitation, no slowdown, just another calculated move. So the real question is, what exactly is driving this relentless strategy? This content is for educational purposes only and should not be considered financial advice. At the time of this update, Bitcoin is trading around $70,357, showing a short-term gain of roughly 3%. After a period of pressure, the market seems to be attempting a small recovery, but uncertainty is still very much present. Amid this backdrop, Strategy Inc. has once again expanded its Bitcoin position, purchasing 1,031 BTC for approximately $77 million at an average price of $74,326 per coin. On its own, this might not seem like a major headline, but when placed in context with the company's recent activity, it becomes part of a much larger and more consistent pattern. Here's where the story gets deeper. Strategy isn't relying on traditional financing routes like loans or debt-heavy structures. Instead, it's using at-the-market stock sales, essentially selling its own shares into the market to raise capital, and then converting that capital directly into Bitcoin. This method has become central to how the company operates. And this isn't an isolated move. Earlier in March, Strategy executed significantly larger purchases, buying nearly 18,000 BTC on March 9th and over 22,000 BTC on March 16th. Together, these transactions pushed total monthly spending close to $2.9 billion. Compared to those numbers, this latest $77 million buy may appear small. But that's exactly what makes it important. It shows consistency. The company isn't reacting emotionally to price movements. It's following a structured accumulation approach, regardless of whether Bitcoin is rising or falling in the short term. With this latest addition, Strategy now holds approximately 762,099 Bitcoin. That's about 3.6% of the total circulating supply, making it one of the largest corporate holders globally. At current market prices, the total value of these holdings is estimated at around $53 billion. But there's another side to this story that adds complexity. The company's average purchase price sits near $75,696 per Bitcoin. Based on current levels, that places Strategy at roughly $4 billion in unrealized losses. And when you consider that Bitcoin is still down significantly from its all-time high of $126,198 reached in October 2025, the situation becomes even more nuanced. Despite these conditions, the company continues to buy, without any visible shift in its overall strategy. To understand this better, it helps to zoom out beyond just one company. Over the past few years, Bitcoin has increasingly attracted institutional attention. Large asset managers, hedge funds, and public companies have all explored ways to gain exposure, either directly through holdings or indirectly through financial products. This shift has gradually changed how Bitcoin is viewed. It's no longer just a retail-driven asset. It's becoming part of broader financial strategies. At the same time, macroeconomic factors continue to play a major role. Interest rates, inflation expectations, and global liquidity conditions all influence how risk assets, including Bitcoin, perform. Even with recent price volatility, institutional interest hasn't completely disappeared. Instead, it appears more selective and strategic. Within this environment, Strategy's approach stands out because of its scale and consistency. While many participants adjust their exposure based on market conditions, Strategy appears to be following a long-term accumulation model. What makes this situation particularly interesting isn't just the size of the holdings, it's the structure behind the strategy. Strategy still has significant capacity to continue buying. The company holds around $6.2 billion in available stock issuance under its current program. In addition, it has access to multiple preferred share offerings, providing further flexibility to raise capital. This means that, if market conditions allow, further Bitcoin purchases could follow. However, this approach also creates a strong link between the company's performance and Bitcoin's price. As its holdings grow, fluctuations in Bitcoin's value have a more direct and amplified impact on its balance sheet. This is one of the key reasons investors are watching closely. Recent market reactions reflect this balance of perspectives. The stock recently closed slightly lower, but showed gains of over 2% in pre-market trading. This mixed movement highlights uncertainty. Some investors view the strategy as long-term positioning, while others focus on the risks associated with volatility. Meanwhile, Bitcoin itself remains below its previous highs, and the broader market continues to navigate uncertain conditions. Yet, ongoing accumulation by large players suggests that interest in the asset has not faded entirely. So now, the bigger question is, what does all of this really signal? Is this a reflection of long-term confidence in Bitcoin's role within the financial system, or a high-exposure strategy that becomes more sensitive as volatility continues? And if companies continue accumulating Bitcoin at this scale, could it gradually influence supply dynamics and market behavior over time? Or will broader economic forces ultimately shape what happens next? One thing is clear: strategy isn't waiting for perfect conditions. It's continuing to execute its plan step by step, even in the middle of uncertainty. So, if you found this video valuable and want to stay ahead in crypto, market trends, and smart investing strategies, make sure to subscribe to MSTR Hub. Don't forget to like this video, share it with others, and drop your thoughts in the comments. Is this a real opportunity or just another risk? And most importantly, hit the bell icon so you never miss an update. Thanks for watching, and remember, smart moves build strong portfolios. MSTR Hub, where market insight meets strategy.